Two. Good morning, everybody, and welcome to the Lake Norman Financial Briefing featuring Joshua Dobi, who is North Main Financial, and Richard Pappas, who is a business banker with First National Bank. This program is being emceed by the 2020 Public Policy Chair, Jeff Tarte, and I'm Bill Russell, and welcome to our edition of the Lake Norman Financial Briefing. Jeff, you have some questions of our panelists, but I think we're going to start with Richard Pappas as our 2020 chair. Richard, how about kicking us off?
Thank you, Bill. Appreciate being invited to this. I thank you and Jeff for putting this on. This is great content for our members and others in the community. I thank past chair Joshua Dobi for joining us on this, host of his radio show, and of course the owner and manager of North Main Financial. That's North like the direction, Financial, North Main, Main like the street, Financial, like he says on his show. But anyway, thank you for joining us. This is great content. For additional content, I'd ask you to check our website. We have great content there, and hopefully we're helping your business during this time. Wanted to kind of go into a little bit, if I can, about how we as a bank are helping our members our relationships, our client relationships, in trying to navigate through this difficult time. We are trying to work with clients on payment deferrals. That's both landlords and operating businesses, and trying to give them a little bit of relief in their payments and help their cash flow in that respect. We're now looking at a second wave of that for certain types of industries that may need that. So we're certainly actively communicating with our clients. We're checking in with folks on a regular basis. If your banker is not checking in with you, certainly reach out to them. That's what a relationship is. So would encourage our folks to, our members, to reach out to their bankers and develop that relationship. There's been a lot of talk about the Paycheck Protection Program, and that's one that certainly has helped a lot of businesses. Congress has just passed new law that will give additional relief under those restrictions. Wish it came a little earlier, but now it certainly is helpful in letting you have longer to spend those monies. Our bank in particular, our national bank, did over 18,000 of those loans for $2.6 billion worth of lending. Personally, in our community, I did 40 of those loans at $7.1 million and supported 892 local community jobs. So I feel like that's been a great value add that we've been able to do, because I'm one banker. We have many in our community that have done this. So certainly work with your banks to try to get those kind of things done. We're also working with clients on refinancing their debt, maybe lowering the interest rates based on where they are now, and extending out maturities and amortizations to lower your payments to increase your cash flow. A lot of folks are running businesses are very concerned about a second pandemic, a second wave, or that this current situation throws us into a possible recession of some type. So businesses are being very conservative, as they should be. And so I just promote conversation and communication with your bankers. All types of industries have been affected by this. And so we can talk more about those kind of industries as we go forward with this. Thank you.
Richard, I love the background, the cash in the background. You're not sitting in the vault at First National Bank, I don't think, are you?
I am. I'm sitting in the vault, and I need to lend this money out. It's not doing me any good just sitting here, so come on by.
Before Jeff gets going, last Friday's news that the unemployment, when the labor report came out, we dropped to 13.3%, when I think most people thought we were going to continue to go up versus going down, sent the markets soaring. And as I traveled around last week to some of our retailers and talking to our small business owners, everybody is very excited about the future and what it holds. And I was telling Jeff that we need to put this program together, talking about the financial market and the impact that has on Lake Norman. So Jeff, I think you had a series of questions that you really have for Joshua. So I'm going to turn this over to you.
I appreciate it, Bill, and thanks, gentlemen, for joining us today. Really, the only really important question is, how do we all get more of what is behind you, Richard? Because we'd like a pile of that at home. But let's pick up on the PPP program, first of all. And just curious, because there's a lot of discussion and conversation, maybe misinformation, but I hear businesses talking about loan forgiveness. I hear people talking issues around it. That is there another tranche that may be coming? Can you speak to those things?
Yeah, I appreciate it, Jeff. Thank you. And Richard, you may want to amplify what I'm going to say next because you're living this out in real time. Yeah, the goalposts have moved several times relative to the P3 loan forgiveness parameters, literally up until just a couple of days ago, prior to this recording, that really have changed the landscape overall. One of the big challenges, Jeff, that we're seeing and hearing from a lot of small business owners in the Lake Norman region and around the country is, they were working off the quote old set of rules. And when I say the old set of rules, they're only about 8 weeks old, but they were working off the old set of rules. Now they just had the goalposts changed significantly here just a couple of days ago, but a lot of them have already spent a significant portion of that P3 money under the old rules. So the additional tranche idea or some additional parameters of forgiveness definitely being talked about a lot. And I would say, at least in my experience in talking with businesses here in the Lake Norman region, they would welcome that greatly because they really feel like it's been good on one hand, but also continuously very challenging.
How important is it for the businesses to actually track their expenses during this program?
Richard, you may want to speak best to that. Yeah.
Yeah, happy to. So it's extremely important. The SBA has kind of put it on our plate to interpret, and then they haven't given us parameters. So it's a constantly changing thing. I know a lot of people are frustrated. I know people that not only my clients, but people that bank with other banks, and they're not getting any answers either. It's because we don't have any answers, and that's what I've tried to communicate to folks. It's just it constantly gets changed, and the SBA is trying to figure out what Congress wants to do. So those parameters change, but I always tell people the best detail, the best records. Most of our clients are leaving those monies in a separate account to keep a good paper trail. The more documents you can have to justify where those monies got spent and the types of expenses in detail, the better it's going to be and the easier it's going to be. The new laws that are coming out will alleviate that multi-page, hours and hours worth of forgiveness process, but it's still not going to be a breeze. It's still going to be a process. It's not just going to be an attestation of the owner. So keep really good records.
Is the work from home efforts going to impact the PPP program at all? You can have people working from home, or is the idea as long as they're on salary, or do they have to come back into the office if they were doing that before? Any parameters around that at all?
I've not heard anything on location. It's all about payroll. Is that what you're hearing too, Joshua?
Exactly, Richard. It's all about going back to the records idea, ensuring that folks continue to be on the payroll. Or now, again, talking about the goalpost move, if it's not the exact person, having someone who fills that equivalent into that kind of space. So that's, again, another parameter that has been changed because what's happened, without getting too far in the weeds, because of how unemployment has been ratcheted up in terms of benefits, now you have this significant contingent of the workforce that's saying to literally thousands of employers across the country, sure, I'd love to come back, but I want to come back in August after this, quote, bonus unemployment is up at the end of July. So again, as Richard's talking about, so many variables, and they're literally pivoting almost every day.
How's you guys have a feel how the loan market is for business loans? How much has this impacted the SBA to do their normal small business loans for somebody who's trying to acquire another business, a capital acquisition of major equipment? Is that even possible during this period?
I've heard mixed remarks on that. I had a couple of folks come to me and say that their banks are telling them they're not doing any SBA lending at all right now. We are certainly very much doing SBA lending. Our group is very active and very busy, especially since part of the CARES Act included 6 months of principal and interest payments, including the fees and everything on all SBA loans. That's 7A and 504s. That's for existing and anything that closes and funds by September 26th. So they're very busy trying to get those loans because you basically get free money for 6 months. Our folks are very busy with that.
I like free money.
Oh yeah, sure. The SBA is directly lending under the EIDL program. And so there's a lot of those monies going on. Now, how those loans interface with PPP is just a challenge to interpret and understand. So we've got a lot of clients confused with that, but they're applying for everything they can get.
The rates are kind of phenomenally low, whether those are financing. Do you see a preference, or do you see businesses leaning, or are there advantages for the businesses to look at regular lease arrangements, lease to purchase arrangements, just making capital purchase acquisitions? Is it all across the map still? What are you seeing?
So rates are great right now because our cost of funds and treasuries are very, very low, and they've stayed low. So it's a good time to do, like I said, refinances to lower your payments and things like that. I recently looked at a credit because I sit on a board of Carolina Business Capital, which is an SBA nonprofit group. And I saw a proposal that went out on a deal where the bank was in the threes, and we are right now on a 20-year amortization, 10-year call, 5-year call kind of a deal. But the SBA piece, the SBA debenture piece, was under 2%. It was in the ones, and that's just such cheap money. So those rates are nonprofit government debentures, so they're going to be very low, but the blended rate for the customer was in the twos on a business acquisition with real estate and equipment. That's just incredible. If you're going to your regular bank, you're going to be in the mid to lower threes, depending on the credit quality. That's just an incredible, I mean, even during the Great Recession, we barely hit those kind of rates. So it is a good time to do something. The dilemma is, as we look at 2020 interim numbers, they really can't tell us much because most of the time we've been on the sideline. So we're very much depending on last year's fiscal year-end numbers as we're looking at cash flow, and we're hoping that we get back to a normal business practice very soon. So that the credit is an issue right now.
Is there a rule of thumb you guys look at for when somebody should consider refinancing, either a personal loan like a mortgage or a car loan versus or a business loan or capital equipment?
I don't know that there's a set benchmark. I've got a client right now that came to me and he was at 3.95, and we're looking at options. They always have used as a rule of thumb, if you can't get at least 2% reduction, it's not worth the fees. But now rates are so low, you could refinance and get a lower rate and structure that rate where you've got some money going towards closing costs from the bank, from the rate. And so you're not coming out of pocket. So I just encourage conversation with your bank and with your mortgage officer. We've got some great options that allow people, especially through our private banking, that allow people to really take a look at that. It doesn't cost anything to figure out your options and if it makes sense. So I'd throw out that 2% policy and just say, you really have to look at your options today. It's worth looking at.
Gotcha. Let's go back to kind of switch topics or gear, pivot a little bit on the comment Bill talked about earlier about the markets being so strong right now. And do you guys consider we're still in a bear market, or we're in what I hear people refer to as a bear rally? Is that such a thing, and is that where we are? And what's that hold out for businesses and folks?
Yeah, it's certainly in terms of the technical definitions, Jeff. Yes, we not only hit a bear market, which according to most technical definitions is 20% off of the most recent high. So we hit that in mid to late March, and we went significantly below that. We got into mid 30s there for a while off of the high. So we definitely hit that bear market status at that time. And then, as you alluded, we have had almost a V out, and in some parts of the markets, a complete V out from that time. However, as you know, and probably most of the folks who are listening to this recording know, things don't run in straight lines, either down or up for extended periods of time. And that's certainly true when we're talking about bear markets. So what you described there or alluded to as far as a bear market rally is concerned, folks need to understand that includes the word bear market rally. And again, that is very, very rare when we've had that much movement and that much what we just call capital destruction in a short amount of time. It's very, very rare that we would go straight down and then straight back up again.
So that's, given we're still in the pandemic, we're seeing rebounds. What do you attribute to the market turnaround, the jobs being so positive so quickly? And then do you see that holding on for the last 6 months? And I'm going to add one thing into this that we're all aware of is all the qualitative easing that the Fed's been doing. I mean, they dumped $3 trillion in, they're looking at maybe another $3 trillion or what have you. And it just feels like the markets are artificially being propped up and we're waiting for the big collapse. Is that to be projected? Is it going to not occur?
Yeah, you've touched on several. I just wrote them down quickly. You've touched on several of the biggest macro considerations. So without getting too wonky and too in the weeds, so as to put our listeners to sleep.
I like wonky, but it'll just be the two of us, Joshua.
Exactly. So let me just touch on a couple of things. As far as the markets are concerned, because that can be described pretty easily. Markets, as I'm sure most folks know, especially when we're talking about our long equity markets, and even this is true for interest rate markets, are an anticipatory kind of animal. Yes, they are some reflective of where we are today, but they also are attempting to anticipate what is yet ahead of us. So when it gets a couple of kernels of very positive data, like we had here in this last week, then it starts to extrapolate. It starts to say, okay, here's where we are today. Now that means different things going forward. So you have these kinds of radical movements, both up and down, but certainly up most recently. So can that hold? It certainly can, but again, as I mentioned just a few moments ago, markets rarely run in straight lines for extended durations. Even though we, as the investing public, notoriously think that way. We think when they're going up, they're going to go up forever. We think when they're going down, they're going to go down forever. And we've done that now for about 90 years, so I don't expect that that's going to change here, except they more look like waves on the ocean, just like my background here. So I don't anticipate that we're just going to go straight up out of this space as far as the markets are concerned. The jobs number is a little bit of a different beast because of what Richard was describing relative to the P3 loans and folks then being encouraged to hire back. So there is an incentive, as has been relayed through the Treasury, to be able to hire some folks back. So you're getting, I don't want to say artificial, but you're certainly getting some incentive for folks to be hiring back right now. Some folks would argue whether that's too early, as far as the natural conditions are concerned, but certainly that was the intention of the P3 loans, to be able to mitigate some of that downside unemployment risk, even though we initially saw some big numbers.
Sure, but aren't the unemployment numbers we're looking at artificial of themselves, in that they're a creation of the lockdowns by the governors? And once those are lifted, I mean, we surely got to have a massive return to work. We might not return to 3 or 4% unemployment initially, but we surely aren't going to be double digit. Is that a fair statement?
It is, Jeff. And you touched on one of, again, the primary discussion points that I've had with so many folks, so many business owners who are trying to compare this time to the big economic movement we had in a negative way most recently, which was 2008, 2009. And again, without getting too wonky or too in the weeds, there are some comparisons, but for the most part, those are completely different animals. 2008 and 2009, and Richard can speak very elegantly to this, we had serious economic foundational cracks in the system that needed to literally be shifted from where they were to some other place, because where they were sitting was going to fall apart. What we have today is nothing at all like that. I mean, you just alluded to it very quickly. Before COVID-19, we had record unemployment. I mean, so we were down in the 3.5%. We've never seen that. Literally, in all of the time that the U.S. Bureau of Labor Statistics has tracked this stuff, we've never been that low on unemployment. And now we've had not economic crumbling, but as you described well, we've had a public health issue, which has had forced layoffs or forced business stricture. So very, very different. We really can't overlay this on the 2008, 2009 template, if you will. And while I don't want to get unnaturally positive, certainly it makes sense, at least logical sense, that as those restrictions are lifted and as businesses are allowed to perform as they were performing, that we'll see some pretty notable moves in a positive direction.
Well, we're obviously dealing with primarily local businesses in the Lake Norman region, in and around the Charlotte-Mecklenburg, say 15 county region, and obviously across North Carolina. North Carolina is one of the slower states to open up around the country. And just curious, what's the environment as you advise individual investors, as you were interacting with business owners? What's the sense of what needs to happen? How do they keep from losing their businesses over the next 8 to 12 weeks? Are we that, I hear things that we're that fine line on cash reserves for businesses, yet you see and hear about all the cash on the sideline. Any sense of what the story is there and what your thoughts and how you're advising people?
Yeah, I'll give it just through the lens of my own experience. And because I'm a simple person, I'm going to give a relatively simple answer. But in my experience, especially here in the Lake Norman region, we have relatively a bifurcated economic experience right now. On the one hand, we have businesses, and I'll just draw out some broad scenarios like gyms, like salons, like restaurants, others in the service industry who are in that space, like what you just described, Jeff. I mean, they have their P3 loan, many of them, not all of them, have their P3 loans, and they are literally running on a razor's edge and needing some more assistance, needing some more runway in order to keep going. But we also have here in the Lake Norman region, and this is true, at least in my experience around the country, we have a whole collection of businesses which not only are thriving or doing well, but they are exploding. And it's been very interesting to see that bifurcation, because both are happening literally in real time, and they're next to each other. I mean, they're businesses that are in the same towns or in the same office complex. So for the ones that are over here that are on the razor's edge, they're definitely going to need some more help. Otherwise, we're going to see more store closures. We're going to see more businesses that are really suffering. So that comes back to, do we see another relief round come through Congress? Is it the HEROES Act, which right now is stalled in the Senate? Is that some version of that going to come through to be able to help that group? Then you have this group over here, which is knocking the cover off the ball. And they were probably doing well before COVID-19, at least the ones with whom I've spoken, but they've just continued to do very, very well. So it's going to be interesting to see if that bifurcation continues, or if we can bring those businesses along through whatever means to be able to be in more of a recovery and then hopefully a more thriving status.
Richard, as a business banker, you have some comments on that?
Yeah, absolutely. So what I'm noticing is business owners, most of them are doing the smart thing, which is what they recognized back in the Great Recession. They're trying to do more with less. And so to speak to the point of unemployment, I agree with Joshua that we'll see and with Jeff that we will see the bounce back, but we will probably still see a higher unemployment rate, because while they're hiring back, they're being more conservative. They're preparing for another a possible downturn or second wave. So I think that they're being conservative to try to bring back people slowly and to try to do it in a conservative manner, because we're so fresh off of the Great Recession for most folks. So I do think business owners are doing it the right way, and unless their business is exploding, they're doing it that right way. We're going to see businesses close because some of them just can't withstand this. We have so many small entrepreneurs in our community, so many of them, way more than you'd ever think. And so those businesses are surviving, not necessarily ever really doing super well and thriving. They're in growth. They're startup and they're in that growth phase of business. And that's a hard phase to be in when you have a pandemic. So a lot of businesses will fold. For that, we also see a lot of new businesses starting up. So we've got to encourage those businesses. We as a chamber and as a community need to rally around those businesses and see more support, like we see in Davidson with the Hub and some other agencies. We need to try to encourage those entrepreneurs to start up the businesses, because that's the biggest employer we can have. So keep that in mind going forward. As businesses try to be conservative and think about how they're going to withstand the future, cash flow is king, and liquidity is so important. So those relationships with your banks and trying to leverage and get lines of credit are very, very important. I had a few customers that fully levered their lines of credit in getting ready for the COVID shutdowns, and they've since paid those back. And so they know they've got availability, and that's the key, is availability to cash to make sure you can maintain your business in the worst case scenario. The businesses that have been hit the hardest, I'll say, it's obvious, are businesses that are dependent on consumer dollars, consumer discretionary dollars, hospitality, restaurants, breweries. Those businesses that have been thriving lately are very dependent on those consumer dollars. And so while consumers have supported those businesses as much as they can, as restrictions get alleviated, they'll go back to where they were, hopefully. But they're the industries that are most concerned with getting back to normal.
Jeff, I have a political question, and it's maybe somewhat controversial.
No politics on this show. No, I'm kidding.
But my question is this. We did the shelter in place. We were told to stay at home. We did. Certainly with the protests that we've seen in the last 2 weeks, all the rules of sheltering in place and social distancing went out the window. I'm not so sure, as Richard just talked about, a second wave, even if there was a second wave, which we all hope there will not be, I'm not so sure the governor would be able to enforce a shelter in place second time around. I don't think North Carolinians, after witnessing what this has done to their families, to their businesses, I don't think that they would stand for it. What do you think?
Well, there's a lot of stuff being written today about that I'm not so sure. Even the editorial board for the Charlotte Observer spoke to it in this morning's paper, that they're not sure the governor can get away with, for lack of a better way of describing it, a continued lockdown. One, constitutionally, you can't have a state of emergency, as I like to say, forever. At that point, it shifts from being an emergency to just a chronic problem that's part of your current day-to-day affairs, and you need to deal with it appropriately. You've seen things. The governor came in and shut down some of the racetracks where folks were going to events. Other racetracks are staying open. You say that the rules have changed and they have. Well, they actually haven't. The governor, and I'm going to pick a little bit, and I think the world actually of Roy Cooper as a person. He is a good man. I think his heart's in the right place. And I think his guidance is misplaced, however, and how he applies the rules are somewhat arbitrary. And I get the protests are constitutionally protected, but so is the right to assembly. And so he's applying the rules in certain cases and not in others. And I think it's a little bit where it's easier to enforce, he applies it, and where it's very difficult, he kind of looks the other way. And that's going to be problematic going forward. And I think that's, people have had enough. We see it in the application of what is an essential business, what's a non-essential business. Who gets to determine that? Well, the head of emergency management. There's a handful of people. So I get to tell you, you're essential, but, you're not. Those are just tough things to apply. I don't envy sitting in the governor's chair at all, but our businesses can't take this much longer. The inconsistent application of the rules. I mean, whatever it is, you got to stick to it and apply them the same. And give it whatever the environment. That's kind of what I'm hearing needs to be done.
We're certainly wrestling with that. We have members that have Pilates. We have gyms. We have certain bars. The Kilted Buffalo comes to mind, where we have some bars that are allowed to open, some bars that are not allowed to open. Rules don't seem to apply. Many of these are very solvent businesses, but when you go 3 months under these circumstances, I am very concerned that some of these businesses that are great businesses won't be allowed to open.
Yeah, it's a hard application of the rules, the way they've written them. The governor's adopted them, so you can go to maybe a certain bar. And the difference is right now it's the application of the food consideration. If you serve, I believe, 30% of your revenues based on food, then you can also have your bar open. It's a goofy application that's inconsistent, and it punishes certain people for not providing certain services.
Well, Jeff, I didn't mean to turn this into a political
No, I know.
But it is a concern that there's not a single day at this Chamber of Commerce that we don't have calls from our chamber members asking what can be done. But let's turn this back to a financial again. and some other questions of Joshua and Richard.
Well, I'm curious kind of down that pathway, because we tend to, when we're local, we're concerned with the small retail businesses and storefronts. We talked about those types of businesses, but we're still a fairly global participant in the global market in this region. I know in the Charlotte, Mecklenburg, Lake Norman area, we have over 200 German companies in this area. You know, there's a lot of discussion, and I'm curious how that plays out from the financial side, or what you guys hear from businesses of looking to onshore, so we can impact with greater speed our supply chain. And so are those things you see businesses trying to borrow capital funds or monies to onshore manufacturing practices, distribution centers, or do we still have to participate in a global economy, or is that just, you know, a fairy tale?
Jeff, I'll say from my experience, and then Richard, please weigh in where I'm missing here. From my experience, staying away from the politicized answer of what you're asking, because there also is a very hot button political issue over here as well. But relative to, I'll just share a conversation I had with, and I shared it with Bill and Richard offline, conversation I had with a gentleman who's Associate General Counsel for a Fortune 500 company this morning. And they do business all over the world. They have manufacturing facilities all over the world. And with just encapsulating that extended conversation into just a few seconds, his basic sentiment was, now he's obviously in the legal end of things, but they're looking at this corporately. You know, none of them chose to be in this pandemic. None of them, and then the other side of that is, they had talked about the kinds of, you know, onshoring kinds of things, or limiting commercial capacity. They talked about it, he said, for about 15 years. But nobody, you know, organizationally just wanted to make that leap into those kinds of decisions. Well, now they've been forced into that leap. I mean, they've had plants that have had to reduce capacity. They've had plants that have had to shut down for certain amounts of time around the world. And now they're looking at it and saying, well, if we can not only survive, but thrive, you know, in doing that, why would we have that plant in Thailand? Why would we have that plant in Brazil? Because it is a gargantuan expense, and this company happens to be a publicly traded company, so that, you know, if that's something that they could materially reduce their overhead ongoing, and now they've been able to experience it in real time, meaning it's not just an academic exercise of what if, but rather they've been able to experience it real time. They're now literally on the executive team having discussions in real time saying, hey, we don't need it. I mean, that's billions of dollars of overhead there. We can, you know, shift production, increase production, whatever, in facilities here on shore, and not have that overhead. Well, you know what that means for publicly traded companies on the bottom line. So I just offer that as a real world, literally today kind of example discussion that I had.
Are there any conversations that you're hearing from business owners developing any kind of contingency plans if there is a second wave? Maybe not to the extent that it has been, but if it slows down businesses, maybe we don't go into lockdown, but consumers, you know, don't just go in large crowds. We don't see 100% capacity restaurants, those types of things. What's the conversations? Are there any?
There's lots of conversations about stuff like that. And that's why a lot of businesses are looking at the SBA EIDL loans and trying to look at other avenues of sources of cash. They're trying to manage, if they're a manufacturer, manage their inventory and their expenses a little more closely to try to leverage that cash flow. I think most businesses are very concerned about a second wave and preparing for that now. I don't think it's something that can be ignored. If it doesn't happen, great. We all pray and hope that it doesn't. But I think most businesses are aware that it's certainly a possibility.
For you two, both from a financial advising perspective, same even at the bank, Richard, what are the 2 or 3 most common issues you're running into? And how are you advising the people to address those issues or approach them?
So the biggest issue we're dealing with is dealing with payroll related issues as it relates to the PPP program, as it relates to how to interpret the new policies, as it relates to how to hire people on. The second thing is, how do we maintain the health of our employees and our clients. And so how do we focus on the healthcare, make sure we're taking the right measures? And so those are the two things that the business owners that I work with are constantly putting a lot of time and effort into, because they want a safe environment and they want to get back to norm. There's so many restrictions right now, and they are trying to concentrate on cash flow for longevity and to be looking at things conservatively. But those are the two focus factors right now, and they should be.
Joshua, anything from your side?
Yeah, very, very similar. So I would just say ditto to several things that Richard has said. I'll also say, I'll just refer back to what I was saying as far as the bifurcation of business experience, let's say here in the Lake Norman region that I've seen and experienced right now. What we're encouraging those folks who are still in the sunny days camp, though, is to plan for, now that the shock value is out, to plan for the what if there is that second wave. They do have the capacity and ability to plan for it. So to Richard's idea, we're encouraging them to be more conservative. We're not saying stop what you're doing, but have a little bit more of, as you described, Jeff, a contingency plan for the what if. Because again, just pure academic thought. Our thought is if we get a second shutdown as far as economic things are concerned, it's going to hurt worse than the first. And there are going to be other factors involved that weren't in the first wave. So that's why we're saying to folks, it's a little bit more of a conservative idea, but definitely plan the contingency.
Well, kind of one last thing I have, and then I'll throw this back to Bill. If I walked into your businesses today and I said, I'm just trying to survive till year end, what are the big global pieces of advice you would give me?
I'll just say very quickly, and then Richard, please tag along with this. What we're encouraging folks to do first, and we've been talking about it during this entire discussion, but definitely take a look, whether it's unemployment, whether it's SBA loan possibilities, whether it's other forms of relief that have and looks like still will be coming down the line, especially if we get this HEROES Act in whatever form moved through Congress. Make sure that they're very aware of all of those programs and take advantage of all of them, because some of these, and Richard, please anchor onto this, some of these didn't even exist 2 months ago. It's not that we've had expanded programs or that there's more funding, which we have in some instances, but 2 months ago, a significant portion of these didn't even exist. So, and it's interesting. We're talking about P3 loans. We hear about them a lot. We talk about them a lot. I talk with business owners every week who still are not aware or didn't think there was any money left in the programs and are just now getting into it. Richard, your experience?
Yeah, I agree with you. They're not all aware of every program. You just make assumptions because you get calls right immediately when something hits the news. You get flooded with calls of people that are well educated and want to jump on it before monies are gone as these programs develop. But there's many people who are just coming to light now. And a lot of them are the very small business entrepreneurs, and they've been very focused, laser focused on their business, that they haven't really paid attention or thought that they wouldn't qualify. So we're trying to educate people as much as we can without taking on too much liability. We direct them to resources for those kind of things. And then the other thing is just having a relationship with your financial advisor, with your CPA, with your banker, having those relationships where your banker can get your current financials and analyze it and look for ways to leverage your cash flow that don't always include debt. There's other ways through money management, cash flow management, treasury services, things like that, merchant services, there's credit cards, there's other ways to leverage and get some additional float so that you're not coming out of pocket with more lending. And it's important to have those relationships. That's the one thing I would encourage.
The last thing I was just going to suggest or advise, piggybacking on what you guys kind of reference around, is I think more so now than ever is you need to pay attention to the news. You need to pay attention to the politics of what's going on in Washington, D.C., to look for and keep an eye out for new programs that might get instituted and implemented between now and even year end that didn't exist prior to June. There will be things you can almost venture to guess, and staying close to folks like you that are obviously attuned to that, I think will be very important for a lot of businesses as they go forward. And I guess the last thing I had, Richard, Joshua, can I borrow $20 from each of you, please?
I'll give you the 20 without charging you interest, Jeff. So that may be a little bit better than my friend.
Yeah, I'm out. I'm going to have to charge you interest. I'm sorry.
Bill, I'm going to throw it back to you, sir.
Yeah, and I thank all three of you for sharing this morning, this information. This is a hot topic, and again, I was very encouraged last week seeing those numbers, and I wanted to see how this played out in terms of the market. For those businesses that haven't started back, again, we are still in phase 2. A lot of folks think everybody is back. No, there's a large segment of businesses that have still been left out. Even many of our retailers in hospitality businesses are not at full strength by any stretch of the means. Going around, I visited close to 36 of our businesses, and it's very exciting to see consumers back in our retail stores. It's great seeing the folks that are out in the restaurants, and the businesses are taking stringent precautions to make sure it's a safe environment. If you're a business owner and you have not yet opened up, I want to remind you that we have a Restart LKN guide on our website that talks about how to make it a safe environment for your employees and your customers and clients. And I want to thank everybody out there who is going out and continuing to shop Lake Norman or going out into the restaurants. If you're not quite comfortable with that yet, you can order online. Many of them are having curbside pickup. If you even a retail store, if you know what you're looking for, they can have that ready for you. You can go by there and pick it up. So again, thank you, Joshua. Thank you, Richard. And thank you, Jeff, for the program this morning. I think it was very, very informative. And I hope everybody has a great day at the lake. Thank you, everyone.
Thank you. Bill, I'm going to leave you with one thought if we can vote. You know, that's a fascinating service that's developed through the COVID thing, is the curbside service. I hope it stays in place. It's been fantastic.
Sure, absolutely.
So, everybody go get something for lunch and get it curbside.
There you go.
All right,
Thank
take
you,
care,
everyone.
gentlemen.
Thank you.
Thanks.